Hello everyone and welcome. Today, we're kicking off a brand new series designed to demystify something that affects all of us in the UK, the tax system. Now I know what you're thinking. Tax? Sounds complicated, maybe even a little scary. But trust me, by the end of this series, you'll feel much more confident about how it all works. So let's dive into part 1. Your essential guide to UK taxes. First things first, let's talk about the big player in the world of UK tax. HMRC. That stands for His Majesty's Revenue and Customs. Think of them as the government's tax collectors. Their main job is to collect the money that pays for all the public services we rely on every single day. We're talking about the incredible National Health Service, or NHS, that looks after us when we're unwell. We're talking about the schools and universities that educate our children and young people. The police who keep our communities safe, and the infrastructure that connects our country, like roads, railways, and bridges. Even things like state pensions and benefits are funded through the taxes we all contribute. So, while no one loves paying taxes, it's really important to remember that they are the financial backbone of our society, funding the services that make the UK what it is. Now that we know why we pay taxes, let's look at what we pay. In the UK, there are many different types of taxes, but for most people, there are 3 main ones you'll come across again and again. These are income tax, national insurance, and value-added tax, which is usually known as VAT. These 3 are the cornerstones of the UK tax system, and we're going to break each one down. In this video, we'll focus mostly on income tax and national insurance, because these are the ones that directly affect your earnings from a job or self-employment. We'll touch on VAT briefly, but it's a huge topic, so we'll give it more attention later in the series. Understanding these 3 will give you a fantastic foundation for understanding your payslip and your overall financial picture. Let's start with the big one, income tax. As the name suggests, this is a tax you pay on your income. But what exactly counts as income in the eyes of HMRC? Well, it's broader than you might think. The most common source is, of course, the money you earn from your job, your salary or wages. But it also includes profits you make if you're self-employed, like a freelancer or a small business owner. Certain state benefits are also taxable, as is income from most pensions, including the state pension and private pensions. You might also pay income tax on interest you earn from savings or dividends from investments. Even income from renting out a property counts. Essentially, if you're receiving money from one of these sources, it's likely that you'll need to pay some income tax on it. Now, here's some good news. You don't pay income tax on every single pound you earn. Everyone in the UK gets what's called a personal allowance. This is a set amount of income you can earn each tax year completely tax-free. For the current tax year, the standard personal allowance is £12,570. So, if you earn less than this amount in a year, you generally won't pay any income tax at all. This is a really important number to remember. It's the government's way of ensuring that people on lower incomes keep more of their money. Your personal allowance might be different if you have a very high income, over £100,000, or if you claim certain allowances like the blind person's allowance. But for most people, that standard figure is what applies. So, what happens if you earn more than the personal allowance? This is where tax bands and rates come into play. The UK has a progressive tax system, which means the more you earn, the higher the rate of tax you pay, but only on the portion of your income that falls into a specific band. It's a common misconception that if you cross into a higher tax band, all your income is taxed at that higher rate. That's not true. You only pay the higher rate on the amount you earn above the threshold for that band. Let's break down the tax bands for England, Wales, and Northern Ireland. Remember, Scotland has its own distinct set of income tax bands and rates, which are slightly different, so if you're a Scottish taxpayer, you'll want to look those up specifically. For the rest of the UK, once you've used up your £12,570 personal allowance, the next slice of your income up to £50,270 is taxed at the basic rate, which is 20%. This band is where the majority of taxpayers in the UK sit. If your income goes above that £50,270 mark, you enter the higher rate band. Any income you earn between that amount and £125,140 is taxed at 40%. Again, it is crucial to remember that this 40% rate only applies to the portion of your income within this specific band, not your entire salary. Finally, for the very highest earners, there's the additional rate. If you're fortunate enough to earn over £125,140, that portion of your income is taxed at 45%. So, to recap, you get your tax-free allowance first, then you pay 20% on the next chunk, 40% on the chunk after that, and 45% on anything above the top threshold. This tiered system is designed to be fairer, ensuring that those with the ability to contribute more do so. Now let's move on to the second key tax we mentioned, national insurance. This one often causes a bit of confusion. Is it a tax? Is it something else? Well, you pay it to HMRC just like income tax, and it's taken from your earnings in a similar way. So for all intents and purposes, it functions like a tax. But its purpose is more specific. National insurance contributions, or NEETs, are primarily used to build up your entitlement to certain state benefits in the future. The most significant one is the state pension. The amount of state pension you receive when you retire depends on your national insurance record. It also funds other benefits like contribution-based job seekers allowance and employment and support allowance. So, paying national insurance is a bit like contributing to a national insurance policy that supports you during unemployment, illness, and retirement. So, who needs to pay national insurance? Generally, you start paying it once you're 16 years old and you earn over a certain threshold. If you're an employee, your employer will deduct it directly from your salary through the pay system, the same way they deduct income tax. You'll see it listed separately on your payslip. If you're self-employed, you'll be responsible for paying your national insurance contributions yourself, usually as part of your annual self-assessment tax return. There are different classes of national insurance depending on your employment status and how much you earn, but the principle is the same. You contribute based on your earnings to qualify for state benefits. We'll explore the different classes and how they work in more detail in a future video. And that brings us to the end of our first deep dive into the UK tax system. Let's quickly recap what we've covered today. We learned that HMRC is the body that collects taxes to fund vital public services like the NHS and education. We identified the three main taxes most people encounter: income tax, national insurance, and VAT. We focused on income tax, explaining what counts as taxable income and the crucial concept of the tax-free personal allowance. We also broke down the different tax bands and rates, clarifying how the progressive system works. Finally, we touched on national insurance, explaining that it's your contribution towards future state benefits like the state pension. I know this is a lot of information to take in, but you've taken a huge first step towards mastering your finances. Understanding these core concepts is absolutely fundamental. In part 2 of our series, we're going to build on this knowledge. We'll be looking at how tax is actually collected through the pay system and self-assessment. We'll also explore tax codes and what they mean, and we'll dive into the world of tax reliefs and allowances that could help you reduce your tax bill. It's going to be packed with practical, useful information, so you won't want to miss it. Thank you so much for watching. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe and hit that notification bell so you won't miss part 2. See you in the next video.